Bitcoin crash in Cathie Wood's perspective. Bitcoin is falling. Again. Headlines flash across your phone. Crypto collapsed. Billions wiped out. Is this the end? Voices get louder. Fear spreads faster than facts. And in the middle of the chaos, one investor calmly says, "Everyone is wrong." Her name is Cathie Wood. And while the crowd panics, she leans in. Tonight, we break down why she believes this crash is being misunderstood, why fear may be creating opportunity, and why the story of Bitcoin might be far from over. This isn't just about money. This is about conviction under pressure. Who is Cathie Wood? Cathie Wood is the founder and CEO of ARK Invest. She built her reputation by betting on the future. Tesla before it exploded. Before it went mainstream. Disruptive innovation before Wall Street believed. She doesn't invest in what feels comfortable. She invests in what feels early. And early always feels volatile. So when Bitcoin crashes, she doesn't see disaster. She sees a test. Crash that shook everyone. Bitcoin drops 20%. Then 30%. Maybe more. Social media explodes. Friends who never cared about crypto suddenly have opinions. It was a bubble. I told you so. Crypto is dead. But here's what's fascinating. This has happened before. Not once. Not twice. Many times. Bitcoin has experienced massive crashes throughout its history. And every time, the same words appear. This is the end, yet somehow, it survives. Everyone is so wrong. Cathie Wood's message cuts through the noise. She says people are watching the wrong metric. They're staring at price. She's watching adoption. They're reacting to emotion. She's analyzing long-term data. They see collapse. She sees volatility. There's a difference. Markets are emotional machines. When prices fall, stories turn dark. But fundamentals don't collapse overnight. Code doesn't panic. Math doesn't panic. People do. Bitcoin is built on scarcity. Here's the part most headlines ignore. There will only ever be 21 million Bitcoin. That number doesn't change during a crash. It doesn't change during fear. It doesn't change during government press conferences. Scarcity is built into the system. Cathie Wood often compares Bitcoin to digital gold. Gold doesn't produce earnings. It doesn't pay dividends. Yet it holds trillions in value. Why? Because people believe in its scarcity. Bitcoin operates on the same psychological foundation. But it's digital. Borderless. Portable. Programmable. That's not erased by a bad month. The halving. A silent force. Every 4 years, Bitcoin's supply issuance gets cut in half. It's called the halving. Less new supply enters the market. Demand doesn't need to explode. It just needs to remain steady. And history shows something interesting. Major bull runs have followed these supply reductions. Not instantly. Not dramatically overnight. But gradually. Cathie Wood believes most investors underestimate this cycle. They look at today's red candles. She looks at long-term supply math. One is emotional. One is structural. Innovation always looks ugly early. Think back to the early internet. The late 1990s were wild. Then came the crash. Companies disappeared. Investors lost fortunes. Many said tech was finished. But innovation didn't stop. Companies like Amazon survived. They looked broken at one point. Then they reshaped the world. Cathie Wood sees blockchain technology through that same lens. Messy. Volatile. Early, but potentially transformative. And transformative technologies never move in straight lines. The psychology of fear lets zoom in on something powerful. When Bitcoin rises, people feel smart. When Bitcoin crashes, people feel foolish. Emotion drives decisions. Most investors buy when things feel safe and sell when things feel scary. But markets don't reward comfort. They reward discipline. Cathie Wood's strategy requires emotional endurance. Buying when others panic. Holding when critics get louder. That's not easy. But neither is long-term wealth building. Institutions in the long game another narrative during crashes? Institutional money is leaving, but large institutions don't operate on Twitter timelines. They think in years, not days. Cathie Wood argues that institutional adoption of Bitcoin is still early. Very early. Volatility doesn't scare long-term capital the way it scares retail traders. In fact, sometimes it attracts it. Because lower prices change risk-reward dynamics. Fear creates discounts. And disciplined investors pay attention to discounts. The real risk now, let's be honest. Bitcoin carries risk. Regulation. Competition. Technology flaws. Market cycles. Nothing is guaranteed. Cathie Wood understands that. But she evaluates risk differently. She doesn't ask, can this drop 30%? She asks, what happens if this succeeds globally? If Bitcoin becomes a global digital reserve asset, the upside could be enormous. And when upside is asymmetric, volatility becomes part of the deal. The bigger picture, Bitcoin is just over a decade old. That's nothing in financial history. The stock market has existed for centuries. Gold has been trusted for thousands of years. Bitcoin is still in its early chapters. Early chapters are messy. Critics are loud. Believers are tested. But that's how new systems grow. Slowly. Painfully. Then suddenly. Right now, the screen is red. Fear feels real. Doubt feels justified. But here's the deeper question. Is Bitcoin failing, or are emotions just louder than fundamentals? Cathie Wood believes the crowd is focusing on the wrong thing. Price is temporary. Adoption is structural. Fear is emotional. Scarcity is mathematical. Crashes don't destroy conviction. They reveal it. History shows that innovation often looks weakest before it proves strongest. That doesn't mean this is guaranteed to succeed. It means the story is still unfolding. And the loudest moments of fear have often marked the quiet beginnings of opportunity. So, the next time the screen turns red, ask yourself, are you reacting to noise? Or evaluating the long game? Because sometimes, when everyone thinks it's over, that's when the real story begins.